As you have probably guessed from the title of the video, today we are having a look at American Tower Corporation, ticker AMT, currently trading at $182.18 and down by about 29% over the past year. And all of this means that AMT is currently trading at a 52-week low by about $1. Now, if we have a look at the 5-year chart, we can see that AMT wasn't trading this low since about 2019, which means that AMT is currently trading at an about 4-year low. Now jumping to tip ranks, we can see that the analysts currently have a 13.15% upside for AMT, predicting a price of $237.10 by the end of 2023, with 9 buy ratings, 1 hold rating, and 0 sell ratings. Now, if we jump over to the monthly full, we can see that the demand for AMT's assets remains strong, and the adaptation to 5G technology is helping drive revenue growth, with tenants billing forecast to increase by 5% through 2023. Now, researchers also believe that cell phone data usage could increase at a compound annual rate of 12.6 to 19.6% during the next 5 years, which would undoubtedly increase AMT's growth as they are still the largest international telecommunication REIT. Now, to have a look at AMT in a bit more depth, we'll jump over to my REIT valuation spreadsheets, where we'll have a look at the 9-pillar analysis and calculate the intrinsic value of AMT using the historical price to FFO model, multiples valuation model, and the dividend discount model, where all these models will lead to our ultimate valuation at the end of the video. And as always, if you want to download these spreadsheets for your own personal use, you can access them at my Patreon at the link in the description. With that, if we jump over to the stock screener and plug in the ticker AMT, all the data will show up automatically. And right here we can see that the starting dividend yield for AMT is sitting at 3.45%, a very average dividend yield for any REIT, which gives us a dividend payout of $6.28 per share per year and a trailing payout ratio of above 100%. And when the trailing payout ratio is above 100%, it essentially means that the company is going to debt when paying for dividends, which of course is a big red flag. Now, the institutional ownership of AMT is sitting at 93%. And the beta is sitting at 0.57, which really means that you won't see much volatility with this company as you would with the overall market. Now, if we direct our attention up here to the balance sheet, we can see that the total liabilities of AMT decreased by almost 10% since 2022, raising the equity up by almost 10% as well, which would mean that AMT is indeed trying to pay off their floating debt. Now we can jump over to the 9-pillar analysis, and right away we can see that the rating for AMT is sitting at 7 out of 9. Now for the first pillar, we want the 5-year price over FFO to be below 20. In AMT's case, this metric is sitting at 25.37, meaning that AMT could be potentially overvalued by almost 25%. AMT's profit margin is sitting at 71%, and they have a very good net income, revenue, and FFO growth over the past 5 years. Now, the price to FFO over the past 5 years is sitting at 21.57, and there is consecutive dividend growth sitting at about 17% annually, which is a very, very decent dividend growth indeed. Now, there is one big red flag with AMT, which would be the long-term liabilities of the 5-year FFO negative dividends sitting at 5.52, which would mean that AMT would need about 28 years to pay off all their long-term liabilities while paying out their current dividend. Now, this combined with the very high trailing payout ratio could mean that AMT will have a dividend cut in the next few years. But let's jump to the first valuation model, which is the historical price to FFO model. Here we will take the historical price per share and the historical FFO per share and calculate the historical price to FFO. Now, to calculate the intrinsic value, we take the current price to FFO of AMT and compare to the average price to FFO. And of course, the lower the price to FFO, the better. And therefore, as the current price to FFO is sitting lower than the historical price to FFO and the price per share is sitting lower as well, it means that AMT is potentially undervalued compared to what it has been trading in the past. But now we can move to our second valuation model, the multiples valuation model. Here I will be comparing AMT to PSA, CCI, and VICI. This model is very similar to the historical price to FFO model, but instead of comparing AMT's historical price to FFO to its current price to FFO, I compare its current price to FFO to the average current price to FFO of companies which operate in the same sector. I took these companies' current stock prices and their current FFO per share to find their price to FFOs. I then averaged out those prices to FFO and got an average of 20.12. I compared this average to the price to FFO of AMT, and of course the price to FFO of AMT is lower than the average price to FFO of the three companies, and therefore we get an intrinsic value of $210.90, indicating that AMT is indeed slightly undervalued compared to companies which operate in the same sector. Now we can move to our final valuation model, which is the dividend discount model. Here we took the dividend payout over the past 5 years and calculated the average growth rate to be sitting at 16.26%. Now due to AMT's payout ratio being higher than 100% and their very high long-term liabilities of their FFO, I project a future growth rate of only 7% compared to the average growth rate, as I do believe that AMT will need to lower their dividend growth rate. Now, when the projected dividend growth rate of a company is higher than the company's WACC, the intrinsic value comes out to be negative. And therefore, I have my alternative dividend discount model, which is based on the next year's dividend calculated with our projected growth rate and the stock price next year, projected by many analysts all over the world, and of course the WACC. And using this alternative model, we get an intrinsic value of $231.34. Again, quite higher than the current trading price of AMT. Now we can jump to our final valuation model, where we will switch the dividend discount model to our alternative dividend discount model, and we will average out the historical price to FFO, multiples valuation, and the alternative dividend discount model to get an ultimate intrinsic value of $220.30, about 21% higher than the current trading price of AMT. Now if we plug in a margin of safety of 20%, the acceptable buy price would be sitting at $176.24 a hold for now. But if we plug in a margin of safety of say 15%, a margin of safety I like to go with, we would get an acceptable buy price at $187.25, which would indeed be a buy at the current trading price of AMT. Now, personally, I do believe that AMT is a great company with a great growth potential, but considering the current market, I believe that the stock price did not yet reach its minimum. With that, if you enjoyed the video, make sure to leave a like and consider subscribing, as it really helps the channel out.